is actually a lot of new content, but we thought maybe it would make sense to check, just how up to date you guys are with all of the exciting refi things happening in Celo.
Yeah, it seems like, and if you were here for earlier panels today, especially the panel on L1s adopting refi, there seems to be a race going on between who can be the greenest, and it's, I think, kind of cool and funny that was an actual argument between two different L1s talking about who's the greenest L1 right now, and it's amazing to see that there's that much commitment at the protocol level towards being green and having green activities. And the announcements that have come out of Celo recently, I personally think put them a little bit ahead of some of the other ones, and some of the announcements that are coming out and some of the things that we're going to talk about today that we're doing together with Celo really, I think, push the envelope really far.
Yeah, for sure. And, actually, I think it's kind of exciting that people are having these arguments. I think one reason why Celo has attracted so much of the refi community to the platform is because it was the first chain to offset the carbon that the network contributes to. So just as a quick refresher, 3 years ago, literally a week after the Celo network launched, the very first governance proposal in the ecosystem was to offset the carbon that the network is emitting through block rewards in a fully programmatic, automatic way. And since then, I think the proposal passed with huge fanfare. And I'm really excited because we wanted to kind of put a stake in the ground. We wanted to, if you think back 3 years, holy crap, that was a while ago, Ethereum was still proof of work. Bitcoin, was and still is proof of work based. And the narrative back then was chains were really bad for the environment and that we can't use them at all to help fight climate change. But we wanted to put a stake in the ground. We wanted to show people that chains can actually contribute to helping fight climate change. And we wanted to change the whole narrative. And to do that, it's not enough for just us to do this, but we actually did want other chains to follow suit. And of course, some did since then. And that, people ask us a lot about that, and we're actually really excited about that. So it's kind of nice that people are arguing about this.
Yeah, and it's almost become now table stakes for proof-of-stake chains to offset the balance of their emissions. Proof-of-stake chains obviously have very low emissions to begin with. But then beyond that, what we're seeing, and this was sort of led by Celo, that you're going beyond just the offsets of the actual emissions of the chain. It's about making the chain planet positive on an ongoing basis by building offsetting in that goes above and beyond what might be the actual emissions of the chain itself. And it's really nice to see other chains coming along and starting to follow that model as well. And the race is cool, man.
Yeah, the race is definitely interesting. And, not to be outdone by these other chains, we've had an exciting announcement last week around ultra green money that I thought it would be nice to talk a little bit about. And then there's an exciting announcement also from Flowcarbon side as well.
Yeah, so you want to start with ultra green money and explain to everyone what it is and how it works and how it really pushes that envelope of making Celo even more planet positive.
Let's do it. Okay, and for this we have some slides, so get ready, guys. These are very text heavy. This is the first one. Who recognizes this emoji? Woohoo, yes, it is a speaker emoji. Speakers make sound. And before there was Celo, before there was even Ethereum, there was Bitcoin that coined sound money, right? This idea that there's 21 million Bitcoin, there will never be more. And, this is kind of a promise that Bitcoin makes to every Bitcoin holder that, it will not inflate itself in perpetuity forever. And so sound money has been a thing for a while now, and, it's been certainly something that a lot of people in the Bitcoin community have gotten very excited about. Since then, Ethereum has done something pretty cool. Who here is familiar with ultrasound money? Cool. Maybe half the room, if I'm going to guess. A few people might know but didn't raise their hand. So this emoji, who recognizes the left emoji over here? We know what the right one is. The left one is, of course, a bat. Bats communicate with ultrasound, or they at least hunt with ultrasound, hence the emoji. And so, Ethereum launched EIP 1559 last summer, where you have a portion of each transaction fee, dubbed the base fee, which is now burned whenever you transact. And so on days where there are more transaction fees burned than there are emissions due to the proof of stake protocol, Ethereum has become kind of deflationary. And so deflationary is better than having a fixed supply, hence ultrasound. And so ultrasound money, it's a great idea. Celo has supported EIP 1559 actually for 3 years now, so 2 years before Ethereum. But Celo sent the base fee to the Celo Community Fund. And so a couple of weeks ago, for the 3-year Celoversary, Celo launched its version of ultrasound money, which we are calling Ultra Green Money. So we still have the ultrasound bat, but we replaced the speaker with a tree, which makes a lot of sense, right? Because bats and trees clearly go better together than bats and speakers. But the great thing about Ultra Green Money is that similar to ultrasound money, and of course this is heavily inspired by Ethereum, 80% of base fees now get burned instead of going to that community fund, but 20% go towards programmatically buying carbon offset credits on-chain, on Celo, and then retiring those. So going forward, every transaction on Celo will help fight climate change. This is in addition to the offsets that are being purchased programmatically using block rewards today. And there goes a phone. We have an image here to explain this meme style, right? Again, bats and trees are a cute combo, and they go better together than speakers. So yeah, fighting climate change one transaction at a time. So that is ultrasound money. And if you're curious, Ultra Green Money. And if you're curious, you can learn more by going to ultragreen.money, where we have some nice charts that show you how much CO2 has been offset, and you can see all the stats around this. And then there's also a cool little widget that you can use to join the fam, so to speak, by adding the bat and the tree emoji to your Twitter profile and then having it be verified by this website. So definitely check that out. Yes, we're really excited. As we said before, we've been thinking long and hard as an ecosystem for how blockchains can, at the layer 1 level, help fight climate change. We started 3 years ago with that governance proposal, and today we're going even further, really pushing the envelope of what's possible. So yeah, ultragreen.money.
Woo! So one of the reasons why this is so significant is that it helps to push more money into the fight against climate change. And one of the biggest challenges that we have in the fight against climate change is the amount of money going into the space, the amount of funding. We have a multi-trillion-dollar funding gap, and I apologize that my slides are not going to be as clever and text-light as Marek's.
More educational, probably.
And just to give you a sense of how much money needs to go into, this is an estimate from Bloomberg, there's basically a $5 trillion annual gap. And if you think about, just to put that in a sense of scale, global GDP is a little over $110 trillion. The U.S. budget, the U.S. government budget, is around $9 trillion a year. And that's the amount of money that we need to put into climate change activities. So things that actually remove carbon from the atmosphere, as well as things that prevent carbon from being released into the atmosphere. And part of the problem of why we have such a hard time hitting that gap is that the capital markets for carbon have yet to be built. The market today is still so small, and the actual infrastructure around the carbon markets, especially the capital markets, the structured products that would go into this, are incredibly underdeveloped. And one of the opportunities that we have is to actually build those capital markets on-chain, and to do this as a on-chain blockchain primitive, and to take this ahead. And you look at, for example, this is a quote from Larry Fink talking about how the tokenization of asset class offers the prospect of driving efficiencies, shortening value chains, and improving cost and access to investors. Right? Larry Fink is a big proponent of moving some of these capital markets on-chain. And one of the reasons why we need to move these on-chain and take these structured products on-chain is to actually allow for the risk tranching that financial investors are used to. And that
I got a quick question for you.
Yeah.
How many of these assets are on-chain today?
very, very few, if not, I think there's a couple dozen $1 million worth of climate assets on-chain, and compare that to, a $2 billion market. But
how do we accelerate that?
You're seeing the acceleration pick up pretty heavily right now. There is a huge movement towards the spot market for carbon credits moving on-chain, and there's a big uptick in adoption. When you talk to financial markets people and you say to them, well, we need to build a new capital markets, they're like, well, it's obvious that you would build a new capital market stack on blockchain. And so the opportunity now is, how do we build that? How do we go ahead and get that done? So what does it look like to build a new capital market stack on-chain? And so we start with taking the individual primitive. And so the individual primitive that we need is the forward financing of a carbon credit. So the ability to say, this is a project, that project, where it's going to get its cash flow from, where it's going to get the revenue to pay back the investor is going to come from a carbon credit. So that carbon credit is going to be ultimately sold into the market. And so you can take the forward financing of it and follow it along a value chain from origination to raising capital to verification to the issuance and then finally the sale. And if we can bring that forward contract on-chain as the primitive, we can start to build a capital market stack around that. And so what that ends up looking like is we can take these forward contracts, we can move them on-chain as digital primitives, and then we can actually put them into structured products. And structured products are the lifeblood of credit markets and the lifeblood of financial markets in general. If you think about what a structured product is, mortgage-backed securities, for example, right? And they are really complicated instruments that don't necessarily have very good databases on the back end. And so what blockchain offers is a really, really good database on the back end to track these things, turn them into tranches, move the issuance into and the sale of carbon credits as they're issued into a permissionless, trustless activity, meaning that the forward contract is on-chain, that is fulfilled by a token being delivered to it in the form of a carbon credit, and then that token actually being sold automatically into a liquid market on-chain where cash is then delivered back to an investor, and then the smart contract follows a waterfall about who gets paid what and how much at what time. And then on top of that, you can then build out a very complex derivative system which allows for even more financing to come on to be done into these projects, because you actually have the ability to even further dial down the risk to a specific or the exact requirements for a specific investor.
Can I repeat what you just said?
Sure.
See if I understand.
Please.
So what you're saying is this is a way to basically accelerate the creation of carbon offset tokens on platforms through basically these financing like protocols, like Centrifuge.
Exactly.
And then we can retire those on every transaction. Is that what we can do?
Ultimately, that brings the spot credits on chain, which then would be purchased by protocols automatically or purchased by individuals, purchased by corporations into this liquid market.
You got to feed the bat.
Exactly.
So you're just feeding the bat is what you're saying.
Feeding the bat. And so to this end, Flowcarbon did a project in September of last year where we actually took a forward contract, we brought it on chain, and we then put it in using Centrifuge protocol. We put it into a pool where we were then able to tranche the risk and issue 2 securities against that pool. One was a senior security, and one was a junior security. The senior security functioned essentially as debt. It's paid a fixed rate of return upon the completion of the project and the cash flow being delivered. And then the junior tranche served as first loss capital, meaning it absorbed the losses, if there are any, from the pool. And then also got to if there weren't any losses, it got the balance. So it also had the ability to be like an equity-like return and have upside based on pricing in the market. And so this creates 2 different kinds of ways to invest in carbon projects. One is a safer investment that has first loss capital in front of it, so you're not, if there is a loss, you're not going to be hit by that loss first and paid a fixed rate of return. And then the junior tranche, which has the ability, if the carbon market prices go up, to actually be a very lucrative investment for you. And
what were the returns on this?
So the returns, we actually have them listed there as what they're estimated at. The project hasn't completed yet. We're waiting for the credits to be issued and then sold into the market. But based on the estimates of where we have seen buyers for this project lined up, the senior tranche is going to return a 15% fixed return, which was what it was expected to do. And then the junior tranche should see around a 90%, if not slightly higher return, based on current pricing. Again, until the credits are issued and sold, if the market goes up, that return can go up for the junior investor. If the market goes down, that return can go down for the junior investor. And it's very similar to other products that you see in sophisticated financial markets around everything from airplane financing to mortgages.
So how can you compose this with other protocols on blockchains?
Yeah, so that's really sort of the amazing part about this, is that once you've brought this primitive on-chain, the forward contract itself, you can now start interacting with it. What that means is, let's say now a corporate comes in and says, I want to buy a bunch of different offsets and create my offset portfolio for the next 10 years. And you have multiple pools like this that have been set up, and they have financed hundreds of different projects. The corporate can now come in and pick what they want, basically agree to purchase them at issuance, and create a portfolio. They can then finance that portfolio through DeFi protocols. They can then move that onto other blockchains as they want, as they see fit. They can also then build additional derivatives on top of it, and then all of that can then issue the credits, and all of this respects, the smart contracts respect all of these arrangements. And so the unwind of this as each transaction happens is basically automatic and totally transparent across the system. If you think about what happened in 2008 when the mortgage-backed security market collapsed, the big problem was that no one knew what any of these things were and who owned them and how they were connected to each other, because they were derivatives on top of derivatives on top of derivatives that were tranched, and no one really understood exactly in real time how these things are connected. Blockchain solves that, especially if you bring the primitive on-chain first. And so everyone since 2008 talking about the promise of blockchain is like, oh, we can build mortgage-backed securities on-chain. Bringing the legacy mortgage market on-chain, incredibly difficult, lots of different jurisdictions. There is an existing legacy market. For carbon markets, this stuff is relatively new, so it's very easy to bring this on-chain as a primitive.
And one reason why I get really excited about this is, we talked about there not being yet as many carbon assets on-chain as we would like. So this will obviously help accelerate it, but it also helps accelerate something else that I'm really excited about. And maybe you've heard us talking about this in the Celo ecosystem before, but one really elegant idea that a philosopher named Charles Eisenstein frequently talks about is this idea of backing money by natural capital. And there's now a bunch of projects in the ecosystem, Mento, Collectivo, that are experimenting with this idea. And so this idea is that you can back, for example, community currencies or stable coins with things like tokenized trees or other natural capital. This is a very beautiful idea, and it stems from the fact that historically, whatever has backed money, people tend to value more of in the world. And so if you back money by things that you want to see more of in the world, you're going to have these really nice side effects. And that's a really exciting and amazing vision. But to get there, we need to help accelerate the creation of these tokenized assets. And it turns out that maybe we can also back money by things that help accelerate that future. And so maybe that's a layup for what's next.
It definitely is. And that is, where does the capital come from to back these projects? And so one of the big options is stable coins like the Celo Reserve. There's also other crypto native protocols. And then obviously the big goal at the end of the day is to get the institutional investors who drive the financial system and capital flows around the globe into this ecosystem financing projects. And so we have to sort of lead by example, though, as a Web3 native activity and show how this works and show how capital, natural capital can be built on-chain, how it can be financed on-chain, and how it can also back currency, right? Wouldn't it be wonderful if one day the Federal Reserve, instead of having a huge amount of mortgage-backed securities sitting on its balance sheet, had a huge amount of tranched carbon projects sitting on its balance sheet instead? And so our attempt to get that done and to jumpstart this process, we actually today released a forum post on the Celo forums talking about how we can do this together with Mento using the ability that Mento has to create a stablecoin that's backed by collateral. And we're going to put in, hopefully, we're going to be able to put in a senior tranche of a carbon asset that's financed on-chain into Mento. And this way, Mento can have additional natural capital that's backing it, which was part of the original design of the Mento protocol, and also start earning yield on the reserves that are sitting inside it to help grow the entire Mento ecosystem and the entire Celo ecosystem as well. And so we would really love if people would check it out, comment, and support this. And we're here to answer questions about this. This is obviously, given the density of my slides, a very complex arrangement. And so we really welcome like nuanced discussion about how this works and how this is going to continue to push the ecosystem forward. And also, most importantly, continue to make Celo the greenest chain out there.
Yeah. There you have it. Two big, I guess, updates coming out of the ecosystem. And I think that's the last slide, right?
Yep.
Do we have time for any questions?
How do you verify that the projects included are actual projects?
Yeah, so it's an off-chain diligence process today that as the ecosystem matures, we'll move on to an on-chain verification system. And so what that means is that today we go out to a project, we find the project, and we go and do a ton of diligence. Sometimes we go and do site visits. Sometimes we meet the management team. We look for their track record of creating carbon projects. We look at the methodology. It's a very complicated diligence process. But ultimately, what we then want this to lead to is all of the data that we would do currently today in a, let's call it manual fashion, to actually be uploaded and verifiable on chain so that these projects are coming into the ecosystem being, I want to get funded here. In order to get funded, the requirement over time is going to be that you have to post your data and that the data has to be available for everyone to see. And this way you can, over time, have, in the same way in the financial markets today, you look at very standardized reporting from public companies. And so you can evaluate and say, well, yeah, this bond is worth less than this bond, and it has a different credit rating. Over time, as this data becomes more available, you're going to be able to do that analysis, and you're going to have large sets of machine-readable data that continuously get updated by the projects that say, here's what's happening. IoT. Definitely. And our friends at Open Forest Protocol are actually here, and that's one of the things that they're building is how does that data get on chain, and that specifically for forestry projects. So we do not have in-house digital MRV. We are working with, again, our friends at Open Forest Protocol who are building digital MRV, as well as our friends at T-Climate who are building digital MRV. So we're really looking at how do we make a system that's interoperable with other protocols and other players that are out there. In terms of the vintaging in a forward contract, it's built in directly. So what you do in that agreement, that advanced purchase agreement, I'm saying I'm going to agree to buy from you 1,000 credits in next year, 1,000 credits the year after, 1,000 credits the year after that, and that's the contract. Or the contract could be I'm only buying credits from you in 2025, 100,000 of them. And right now, those contracts are all OTC and also all bespoke. And so what you want to do as well here is start to create standardization around that. And as you start to drive capital into the space, you will be able to drive standardization because people are going to want to access your capital, especially if you're able to drive, by tranching the risk, rates, blended rates of what the return has to be down for these projects, especially smaller projects that right now have a very, very, very hard time getting funding and often end up at usurious sort of rates to get any kind of capital because we're in a new space. Like, we have to be very honest about where we are. We're building something new. We're building something that doesn't have credit ratings, for example, that Moody's and S&P would touch right now, right? So we have to work along a path to get funding where we can today, at the rates that we can today, while moving towards that goal of how do we get the big players into the space and the big rating agencies to then rate these things so that they can appropriately sit on the balance sheets of the largest financial institutions in the world. Well, if there are no other questions, appreciate everyone coming out today, and there are drinks downstairs.